And a very good morning to you, and welcome to the pre-market rundown for TriggerCharts. It is October 23rd on a Friday, 2020, and hopefully you're having a successful week of trading. Hopefully everybody's doing well, health-wise, of course, and all that. Let's get to some of the important things that we need to do before we do anything on this discussion on Fridays, and that is to talk about this disclaimer that you see right maybe over there. Investing involves substantial risk. We know that, and this is just for educational purposes only. It is not a recommendation to buy or sell any security. So I want to make sure that you are understanding that before we start with anything. I want to also tell you, and I want to let you know that thank you. We are in the top 3 of all overall apps in the trading store, and I want to thank you for that. We are the number uno, rated and the highest rated, and there's a reason for that, because what we do works. It seems that these indicators that you have on the charts give people a really good insight into when there is a bias on the long side, on the short side, when to stay out of a trade, when not to be long, when not to be short. I want to take a couple of seconds to just tell you a few things. Number one, the big issue here is that we do it a little differently than most. You know, some of the indicators we have are momentum indicators, some are just broad market psychological indicators, but our Commander series in particular is different. The reason why I say that is it does not only look at price, where a lot of indicators that you have on a technical analysis suite, all they look at is price. They have different segments on there. Maybe they have volume. Maybe they overlay a few things on there. But basically what we do is we put trade data into the system to give us information. And that trade data consists of both volume and price. So it's not that just somebody's buying a can of peas, it's buying, 500 cans of peas at this price, so we can get a mark on where they're willing to go. And if the prices go a little too high, maybe they're going to be backing off and not a lot of buyers. If the price goes too low, maybe people are going to be selling. So what we're looking at, and I use this can of peas as just an example here, but we're talking about the price of a stock. So it gives us a footprint, kind of a blueprint of where institutional traders are trading. And that's really important to understand, because when you're looking at a chart, there is a lot of dimensions you can pick apart. Price, of course, is the only thing that's really important. But at the same time, I think it's really important to understand where the volume is, understanding where the institutions are, understanding where the traders are, understanding where you can feel better about putting your money to work, where the support is, where the resistance is. And that's simply, if you look to the right-hand side of our chart here, is what we're doing with the color, and also when we're looking at, the levels. The second part of the thing that why we're different is because we do put in some color coding that's very effective, easy for you to look at, easy for you to understand. The third thing, when we get to this today, is that the multi-time frame, this is really important. I want you to pay attention to this. The multi-time frame that we have here, when you're looking at this radar screen on the top, the multi-time frame basically is something that nobody else has. Because what we have here, if you look at this whole region up here, up top, is that we have in this particular setup, 30, 60, 240, daily, and weekly. In other words, we're giving you the opportunity to put one stock and have across this the different indicators of multiple time frames in one radar screen on one row. No one else has figured out how to do this, and I don't know if they will. But the bottom line is, even when we started setting this up, TradeStation said, no, that's not possible. But we were able to do it. Anyway, with that, I want to thank everybody for joining us this morning. And let's get to what we're talking about. On the right-hand side here, you see that we do have the SPY. And we've kept that up usually because we want to see what the broad markets are doing. Right now, we see that the YMs, the mini futures on the Dow, are up about 92. We have about up 11 on the SPUs, and we have the Qs are up about 27. They're lagging a little bit. That has something to do with Intel this morning. But really, what is going on and what is the most important right now, we'll tag it as triple E. Like Triple X, if you watch those movies. This is Triple E, this movie. We got 3 things that are really the biggest component of how stocks are trading right now. One more than others, and one addition on top of this. So we have the 3 E's. The E, the election, economics, and of course we have earnings. Now right now the election is what, 10 days away or so, something like that. This is a big issue. Whether or not it's going to move the markets is another one that we will wait for. It seems that right now there is a thought that either party will do just fine. If the Democrats come in, well, there's going to be a lot more stimulus. That's the narrative that's being floated around the markets right now. And if, in fact, there is a particular level of change in the Senate and the Congress and how all that works is all going to be dependent on how things play out. Trump has been gaining a little bit of ground back from Biden over the last couple of weeks, or last week or so maybe. So that's, the market saying, well, if you have more of this, well, we're in good shape. We like that. So there's something about both sides can really claim victory and a bullish stance right now. There has been this notion, and President Trump has been pushing this, that if Joe Biden does get the pick for president, well, they're going to be seeing a crash for people's 401ks and for the markets. I don't necessarily know if that's factual at this point. I think that really the idea of stimulus is more important. And maybe that's why Nancy Pelosi is trying to wait till after the election in order to put some stimulus at play, because if the markets do crack, there is that extra level of potential excitement if we get some stimulus that's put into place after that. So seems to me that it's a mixed bag on those three things. But the three things basically are earnings season, which is happening right now. This week, a few names have come out in the technology space. Last week and part of this week, we're big on financials. Next week's the big week for, big name technology, which are really the ones, the mega caps that are going to lead the markets around. We are in the end of the month. So next week, we're going to see a full court press to, we have about 23rd, 7, 8, 9 days till the end of the month, about 6 trading days or so. So we got a full court press, and probably we'll see a lot of window dressing. We'll see a lot of cleanup, not as much as you see on the quarter, but there is that phenomena that does happen towards the end of the month. And usually it starts Tuesday and Wednesday, let's say it ends on a Friday, Tuesday and Wednesday of that week. Again, we have a lot of overriding factors, though, right now. I think it's really important, especially right now, to trade a little bit lighter into the potential for volatility. Watch your trade size, watch your risk factors, watch how much your allocations are for any particular area, and watch where your levels are. That, I think, is really important. You look at the chart to the right here, and one of the things that you can see very clearly is, and I just drew this line in this morning right here, but what we see on the right-hand side of this chart is that the S&P has basically been able to move much higher over the breakout point, this yellow thing that we got right there. We got a really nice long-term. This goes all the way back to, 922. So about a month right now. We have a month-long level of resistance. Very, very wide overall altimeter from 323 to 343. But which seems like we're able to hold on pretty well to this level of now, which was resistance, is now support. And you can see 1, 2, 3, 4. We'll call it 4 touches. A little bit of a drop below, then a scoot higher. But 4 touches of that line has been support. And that's pretty good for the markets to understand where you have that opportunity. I will share with you, though, because it is such a wide area, and I'll draw this for you. You can either use your box tool, or I'll just use an annotate tool. Oops. Let's kind of go a little bigger. Look at that range. That is a gigantic range. This is more, when we see ranges like this here, this is even a wide one. And especially when we see that there is a massive amount of difference from a spread standpoint and pricing standpoint from our level of high support or high volume node, or the level of, as we'll call it right here, the point of control, down to our support level on the bottom. That is a concerning factor, meaning there's really air underneath. In other words, there's not a lot of pricing support underneath those levels. That's an area you need to be concerned about if you get below that. The flush potential, if we do break down and break below, is very high, back down to 323 right now, which from this chart is 20 points. So about 8% on the downside if it gets there. Let's see what else we got here. Oh, I want to share with you the KRI indicator, because a lot of people had been looking at that. We talked about this on Twitter right when it peaked out right here. So let's see if we can bring this in a little bit closer look at this. The KRI indicator called it again a really nice peak top. And oftentimes what you want to see is these multitude of clusters, either on the up or the downside, green or red. And then once you start to see those and you count 4 or 5 of them and you start to get, into the red zone and you see that kind of last pop up, again, here you only got a couple of these, only 2, and it was just a continuation trade all the way back up. but you have the opportunity for a turn to the downside. Now, notice something. In this scenario here, where we got a level of, downstroke here after this upside move, what we saw was that we got oversold. We haven't gotten oversold yet. We're still kind of in this area of the zero line right now. We saw this channel that kind of started to formulate. This was really sloppy, this situation. Obviously a very bad situation from September. But right now what we're seeing is kind of almost a flag pattern, but we did not get past the old high, right? That's right about here. From not the old high of the year, but the old high of the recent overall trend that we saw back in September. So now what we have is kind of a lower high, and the question is, do we have the potential for a lower low underneath this level? A lot of drawings on that. But we are at market in equilibrium, right? We see that right here where we have markets in equilibrium. What it says is that, watch for the trend to continue in the current way, right? The shorter term trend should continue. What's the shorter term trend? Shorter term trend is down. So we'll see how that plays out. That doesn't mean we can't have some upside, right? You have a downtrend and you kind of move up, then you kind of moves down, up, and then back down, right? Some people will look at this as, ABC kind of thing. But right now we saw the down. This, you would expect it. Maybe you get here and then kind of come down here possibly if that trend was going to continue. Right now it looks like under all cases that there is a buy or a bid that is sitting under everything. And that seems to be something that is pretty interesting. But let's get back to this. By the way, this KRI indicator is only good for one thing. It's only good for telling us where markets are from a psychological overbought, oversold standpoint. You put the SPY in, you just do daily. It's not like you can put different symbols in here. It's just market based. It gives a really good flavor for where the markets are at all times. Where are we? Okay, rotation. Yeah, it looks like there's a sector rotation. The virus, the stimulus, the candidate-dependent rotation that goes on and off almost every day. Throughout the days, we've seen where we have these nice rises in the morning, and then there's no stimulus done, and the carrot of the potential for stimulus is put out there, but a failure by all to vote on anything and meaningful, whether it is the Senate, whether it is the White House, whether it is the House of Representatives. It seems like everybody has differing opinions on all this. What's really interesting to note is it has, of course, as everything has been all the time lately, been politicized. Now the stimulus is politicized. The idea that we won't get a stimulus before the election, why is that? Well, some of it is due to timing. Even if you put it into place right now, you can't get the stimulus out before then. Possibly not even get a vote if everybody agrees to it before the election. But this was the plan. Now, whether it was a plan by the Republicans or the Democrats, I don't really care. That's not the point. The point is we have to know that there is a political hotbed of activity going on with regard to this. Markets believe that stimulus will get done. I believe that stimulus will get done. I don't think there's any reason to believe that we won't get something done. Whether it is a 1.5, a 1.4, a 1.8, a $2 trillion deal, doesn't really matter. These numbers are enormous. This is kind of like a few years ago. I'm like, wow, look at Japan. They're doing a total buy of about, 14 trillion yen. I was like, that's unbelievable how they've really debased their currency. And here we are with doing a $1 or $2 trillion on top of a $3 trillion, which added up to a $7 trillion total between Fed asset purchases. We're in the trillions too. If you don't think that inflation is happening and that there is a debasement of our currency happening, you really need to start thinking about how just a few years ago, back in 2009, 2010, the entire world was imploding and it only took about $800 billion to bail everything out. Think about that. And here we are with a really big problem and a shutdown and all that, but we had $7 trillion, plus we're thinking about adding another $2 trillion, and that's just here in the US, not talking about the rest of the world. So these sectors are kind of rotating. One day the virus situation is getting better, it looks. So the airlines do better, the cruise lines do better, the hospitality stocks do better, restaurants do better. And then the next day, oh my gosh, everything's bad. Right now, things are bad. People are ignoring that, hoping for the stimulus. But there's a list of about 30 different countries that are hitting an all-time high of new cases. I'm not going to get into the discussion if it's good, bad, counting right, testing. Fact is, it's the data that we're looking at, and we're data dependent. That's what we have to look at and think about when we're trading. Earnings, financials really not that impressive. They were okay. I thought the earnings were okay, but the concern is all about their ability to, first of all, loan loss provisions, of course, but secondly, the issue about how they make money in this kind of environment. And if rates go up, and now they have been refinancing all this debt at a much lower level, and now they're taking in mortgages at 3%, and if rates do go up in the future, and maybe they're 5% someday, some way, and they have to pay that out while only taking in 3%, bad long term for the banks. I mentioned mega caps coming in next week. One of the things I think we all can agree with right now is that analysts have no idea, no idea what's going on. The beat ratio is like 83% right now, which is up from about an average of about 65% on the earnings beats. And their beats have been extraordinary for a lot of places. Analysts are totally in the dark. Economists are totally in the dark. The problem is this unusual circumstance that we have right now has just thrown all the traditional types of analysis out the window in terms of trying to guess at what a company's could do. And that's what's so great about charting. We don't have to worry about any of that. We just have to look at the charts and understand what's going on. If you don't include fundamentals, which we like to a degree, but if you don't, and you just look at the charts, that's all you have to look at. You don't have to look at the surprise number to the downside, upside, just look at the price levels. Economics, initial claims have dropped to under 800. I think one of the best numbers we've seen since the pandemic started. Existing home sales popped. We see the housing market is a bright spot in all of this with the de-urbanization trends and all that's happening. Low interest rates as well. Fed's beige book, as expected. Next week coming up, we have new home sales expected to be pretty strong, especially with the extremely low inventory. I put a chart up, I believe, on Twitter this week. Andrew Horowitz, by the way, if you want to follow me, it's just one word. We put a chart up on Twitter, and that was showing how there was very low inventories on the single family homes, and that's really important to know that there's a tremendous demand that will keep prices elevated for some time, and home builders building. So we'll see what happens next week with that. Consumer confidence will be out on Tuesday. We'll see the advanced GDP for third quarter, first look, and personal income and spending. I'll mention this as I mention every time. Number one, put your stocks in the chat. Click on the chat button on the bottom. I'll put a little note in here. I'll put the word here. So Polly will pop up right now. No, that probably didn't work because I didn't do it to the right people. Yeah, here you go. There you go. Put in your stock symbols, and I'll take a look at them, whether they're stocks or futures or currency, whatever it is. We'll take a look at that. I'll mention also to you that anybody that does, in fact, have a new subscription to the TriggerCharts Commander Series will get a free 4-hour coaching course, $199 value. So it's kind of like a freebie to do this, right? It costs you $149 to get the subscription on a monthly basis to the Commander Series. You get a $199 free 4-hour course to do it at your leisure. We'll send you all the information. If, in fact, you do that and you do subscribe and you're a new subscriber, send an email to support@triggercharts.com, and we'll make sure to get you all set up. All right, so let's see here. Here's stocks we'll look at: CMG, ROKU, Intel, Align. I'll look at this. Today I'm going to take a look at your stocks first. I got 2 or 3 of them. Let me get to that. Here we go. So somebody's asking me at FLR, First Industrial Realty. And yeah, Gilead. Yeah, Gilead was this morning. Yeah. First Industrial Realty, interesting. REIT. I don't know. You know, if you want some income, maybe this is good. I'm not sure what the income stream is on this. It looks like a nice consolidation going on here. Be careful. As rates go up, this will probably get hurt. We are seeing something right here on the bottom. Let's take a look, a little more of a close-up on that. Again, we just do daily. You could do 5-minute, 10-minute, 30-minute, whatever, but we do daily for the educational purposes. All the stock charts will look the same. You know, or if you just, click on this and you change to 15-minute or you change it to 1 minute, I don't care, whatever you want to do. We prefer to use 30-minute as our baseline on everything. We are starting to see this stock turn around a little bit over here. So this has what? We just looked this up. 2.3% dividend yield, which is good. Go back to this daily chart. Right now, consolidating through a range. give or take 43 down to about 40. I like to use, I tell you this all the time, I really encourage you to do this. Use a box tool. You do it a couple different ways on this one. Look at this outside range where we see that there is levels. You can probably draw boxes inside of here. Grab your box tool if you want. You can always edit this box tool. Bring this up a little bit to, right about this area. That's kind of the area that you're looking for, trading in between. If you break out above the 44, I think you're in really good shape here. Below that, though, below the 41 level, there is some problems that start to exist. And then clearly on a weekly basis on the left-hand side here, if you want to look at that, you got some support down to about the 40.10. You got, below that, below about, as I said before, about 40 bucks now on the weekly. You start to get some support going backwards. There's a wide berth right here, and it's interesting. It's not like I'm totally enamored with this whole thing. Somebody was mentioning also Gilead. Gilead got approval. This is a really interesting chart. This Gilead, this is the company that has the remdesivir, which is the treatment for COVID, which everybody seemed to have liked. Stock peaked out way back here in March and April, right? Where everybody's all excited, into May at about 85, and has been on an absolute blistering downtrend since then. Now, we don't have less cases, and this has gotten emergency use approval prior, so I don't know what's going on with this, except for the fact that they're probably not going to make a lot of money from this. Everybody's all excited they have the cure and thinking all the money that everybody's going to make from all this. Then they realize that the government's probably going to take over all of this. The deals that they cut is for a very low deal. I mean, look at this for a second. This is fascinating, actually, now that I look at this. This stock is now below where it was back in 2019. How is that even possible? Think about that. Is it possibly because Biden's going to come in? Is it because, and that's what they're thinking, that he could hurt the drug companies? Is it because that President Trump signed a deal that curtailed some of the costs related to drugs? Is it because that this company is going to actually lose money on their remdesivir, whatever it's called, why do they come up with these names? Remdesivir. No, remdesivir. Whatever. Call it the Gilead drug. Who comes up with these names just to be tongue twisters? I don't know. Stock looks awful. It's up 3-4% in the pre-market, but just miserable looking chart. Weekly looks just as bad. It's not even, I can't even say that I would say that it's at support. It's below support, going all the way back here. So right now we'll get up to support, trading at about 62.94 pre-market. So you're right above that level again. It's the consolidation. So I don't know. Somebody mentioned Luckin Coffee. I think that's the one. Luckin Coffee is no longer around. That was a great one when it lasted. That was a nice trade. SL. So we're talking about WW. WW has been a real disappointment. I mean, this is a daily chart of it. It kind of held for a long time. We talked about that. I left the box up here from the last time. Dropped off. We cut out of this position, down about 18 to start to pick it up again. You'll see there was a really nice potential for a move from 18 back to 24. It just doesn't seem to have any legs here that's substantial. And it's really troubling. You're at resistance on a weekly period right now. I would think there's a lot of people want to get involved in this due to the fact they gained a lot of weight. The COVID-15. I surely did during the lockdown. And, right now we see we did see this pop up on the momentum indicator. It's starting to diverge on the downside now from where we are. Not that exciting. SPCE. Somebody's been listening to some of the things we're talking about. SPCE, it's a wild one. It's a SPAC. SPCE has some support here at about 2037. Interim support, I'll call it at best. Really, the levels you want to look at are down here at about 1924. This thing can, easily on any given day be up 8 to 10%, down 8 to 10%. You see this momentum start to roll over a couple of days back when we saw that it kind of tried to pop finally through the $24 level, which was important. But, the problem you have in this one right now, maybe a problem, is that you have this range and kind of will extend over. Right about here. Yep, that range. Yeah, that's the range. The range right there, when you're looking at that, is kind of steep. 20 to 24, we'll call it, which is kind of a 18% range. you know, and really the level you want to look at, like I said, kind of down here and right above the 19s again. But again, still with that, it's just not forming anything that's really discernible. I like the idea of the company, though. So there you go. Let's see if we got this one up yet. No, that's not it. DDD. Let's see. Ah, look at that. That's kind of interesting. All of a sudden, we're seeing that there's another stock that kind of just, in this downtrend forever and then starts to pick up. Very difficult to find where those levels are. But the good news is you are, let's see. Yep. You kind of, where are we now? Up $3, 850. Yeah, so you're in a good zone right here. I mean, you got to get above 864. From there, it flies higher, this triple D. This is a 3D printing company. So what else we got here? Yeah, we looked at FLR. Didn't we look at FLR? Oh, no, FLR. Here's Floor. Somebody want to look at this. Floor Group. Yeah, the Floor Group is starting to get above a level again this daily. You're starting to get the momentum the right way. This has been doing really nice. You got a nice support level that started about 850. Then you got, I would say about, if you get above 1246, I really do think you got a nice shot of kind of continuing on the upside here. So that's kind of interesting. Let's see. All right. CMG dropped pretty hard yesterday, but, people love this stock. This is one of those loved stocks. So it dropped pretty hard down to 1256. Came back to about 1300 and change. Looked like it got a little bit towards, I guess we can say that towards the support level. Seems like there's still some downside here. Calling a short on this right now, seeing a divergence right here. But again, this is one of those loved stocks. Same thing as ROKU. ROKU seeing a little bit of a flag pattern right here with a consolidation inside the range of 217 to 228 on a daily basis. You got the thumbs up on ROKU right here, right? Where you saw that there was really no break since August with the upside potential momentum. A couple little tricks over here that got a little bit hot, but then bounced right through resistance, kind of sitting on this flag, we'll call it right now. Intel down about 10.5% this morning. Looks like it's going to open up where about the 48 level. So down over here somewhere, 48.30. So you're kind of right below support, but still right by that August low. Still have plenty of room to the downside here if you do cut under. Their server chip numbers were not what everybody had wanted. Align Technologies, they make the Invisalign for your teeth, which I've thought about doing from time to time. This has been on a tear since the lows. I mean, look at this. You're at 127, now at 453 as of yesterday. Massive move to the upside. And the good news is we would have caught it a day before. We were kind of in and out, going nowhere. We're on a consolidation. You would have been kind of frustrated probably with this. You would go in, get out, go in, go out, go in, out, in, and then stay out. Then right here, this is kind of cool, right? If you think about this, we got right there, called for a buy, confirmed. You would have been in the next day, and you would have that ramp from 330 up to 453. That's a wiener. That's a beautiful thing. GDX, this is the gold miners going nowhere and a real flat kind of look here after a massive increase. Now we're seeing that we have a rip to the downside on both the daily and the weekly. Gold I like. I think if you want inflation hedge, it's an interesting place to be right now. Consolidating again, you have some nice upside momentum. On a weekly basis, it's rolling over a bit. It's been long, though, since April. I mean, look at this. Got in long at 156, now at 178. Touched down perfectly on its weekly support. That's what I love about this. What I love is we can find those levels of support on a multiple time frame, on a long-term time frame, and then look at it on a short-term time frame, kind of finding out where those entries are. On GLD, you see we're long 28 on the top here. We're long 28 bars on the weekly. We just took a long profit on the daily. Starting to get short on the, what do we have here? The 240, all the lines are on the top here. Short on the 240 on the gold. So we're seeing that there is a little bit of a change in environment there, but something that's still pretty good to see. In gold, what else do we got here? Bitcoin. You can track Bitcoin on TradeStation Live. Bitcoin is down a little bit this morning, obviously ramped higher from about the 11,000 level up to about 13 and change. You look at this on a little bit of a shorter time frame. You see this thing has just been cranking up pretty well. It's got some long alerts that just hit. Look at all these long alerts that just hit on the open, which is kind of interesting. What is on silver? No, on gold, sorry. Gold on the 30-minute just hit this 30-minute here, right? 60-minute. Let's go 30-minute. Just hit on the open. Just got that long alert that coincides that we see up here. Got some short alerts on Tesla, for example, which is down a little bit today after up 1% after the earnings yesterday. All right, we're going to end it right there. We'll have replays available on TriggerCharts.com. Any questions you have, send them in to support@TriggerCharts.com, and I'll see you again next week. Thanks again for joining me, and thanks for being there. Anything you need, please, we're here to help.